Okay, we're going to look at example problem number 20 on page 299, and we're going to talk about partnership bases and how we can handle losses. So we have Zelda owns 60% general interest in YZ Partnership. At the beginning of 2010, the adjusted basis in her YZ interest was $95,000. For 2010, YZ generated a $210,000 business loss, earned $14,600 dividend and interest income on its investments, and recognized a $6,200 capital gain. YZ made no distribution to its partners and had no debt. So how much of her share of YZ's loss can Zelda deduct on her 2010 return? Okay, so our portion of the debt, so Zelda's portion of loss is going to be equal to our 210,000 divided by, times 0.6. So she gets 60% of it, so it's a $126,000 loss that is available to her, but she can't deduct the full amount. Remember, in partnership, we can only deduct losses up to our basis in the partnership. So our beginning adjusted basis is $95,000. We can have an increase, so we have different things that are going to increase it. So increased by our dividend and income on investments. So we're going to take that 14,006 times 0.6, so her 60% share, so her basis increases by 87.60 for that. And then we are also going to also increase it by her capital gain. So we're going to do the same thing. We're going to take 60% of that $6,200 capital gain, so $3,720 is her going to increase her basis in the partnership. So we add those two items to our $95,000. So our new partnership basis is $107,480. So this is going to be our basis before loss deduction. It's $107,800. So we can take then our loss, but we can't deduct the full $126,000. So our limited deduction is going to be only equal to our basis in our partnership. So at the end of the year, my adjusted basis is going to be 0. Okay, so our adjusted basis is 0. We're also going to have that carryover. So the difference minus our 107. So we're going to have 18,520 as a loss carryover, which we'll be able to deduct as our basis increase. So if we have some profits next year, we'll be able to increase our profits. Part Z of our question asks, how would our answers change if we received a $5,000 cash distribution from the partnership before that? So really we'd do the same thing here. Our basis up to that point would be the same, 8,760, 3,720, but then our basis would be decreased by that 5,000 distribution. So our new basis then would only be 102,480. So my limited deduction that I could take is only going to be 102,480 and my carry over will be increased by $5,000. So that loss carry forward is going to go to $23,520 that we'd be able to offset in future years. So that is how we handle losses on a partnership. So remember, we can only the partner can only deduct their percentage of the losses up to their basis that they have in the partnership, up to their adjusted tax basis. So a distribution reduces your tax basis, increases in income and revenues, increase your basis.